The Bank of Canada made its call today, and the headline is basically that everything's on track. Inflation's on the high end of target, but expected to cool and rates are holding. But if you live in Calgary or Edmonton, that's probably not what your month is feeling like. Your groceries, your fuel, your mortgage renewal, none of it feels like is on track. So let me show you why you're not crazy and what to actually do about it. Here's the official version. No change. The bank held its rate at 2.25. That's the sixth hold in a row, exactly what economists and the markets expected. They say that inflation is going to ease back toward 2% by early 2027. Housing is weak, but looks to be stabilizing, and that the current rate they have is appropriate. Capital Economics, who tends to be pretty accurate, expects them to sit tight for the rest of the year. No more rate changes, at least till 2027. The next decision will be on September 2nd, and there's two more after that before the end of the year. So the word of the day is stability. Nothing's moving, which sounds great until you ask, stable at what? You'll hear two inflation numbers and they get mixed up constantly. The big one, or the headline inflation, that's the actual cost of everything. It was at 3.2% in May. That's the highest rate that it's been in a full year. And when you hear that core inflation is near 2%, that's the calm sounding one. Core strips out the wildest movers to find the underlying trend. Gasoline spiked because of the war in the Middle East, and so you pull that out and all of a sudden, inflation's down to 2.2%. But here's the honest catch. Core isn't a lie, it's a tool. It tells the bank where things are heading. It does nothing for what's leaving your bank account today, and unfortunately, you don't get to only buy the calm stuff. You still have to fill up your gas tank, for example. You still have to eat. So what are they actually measuring? Well, 8 categories, weighted by how people really spend. Your 3 biggest are shelter at 28.5%. That's your rent, your mortgage interest, your property taxes, your utilities. Next is transportation. It's almost 18%. That's your vehicles, your insurance, and the gas especially lives there. And food, it's about 17%, so also really big. Those add up to roughly 63% of everything that you spend. And transportation and food are the volatile ones, the exact costs that are getting pulled out that make the core number look calm. So the number they use to say, it's okay. It's built by removing 2 of your 3 biggest expenses. Now, it's not a conspiracy. It's just important to understand before you trust the soundbite over your own budget. So when you hear inflation's close to 2% and then you look at your actual month, trust your gut. And here's the part that really matters. The pain isn't just today's 3.2%. We're still carrying on the compounding from 2021, 2022, when headline inflation was running 7, 8, even 9%. And those prices, they never came back down. They just stopped rising as fast. And your wages, those haven't caught up yet. So today's increase stacks on top of a few years where everything else was just jumping. And that's why it feels heavier than 2%. Could ever sound. So you're not imagining it. You're not bad with money. It generally costs more to live in Alberta, or anywhere for that matter, right now than that headline is suggesting. If your mortgage is up for renewal, this is sharper still. A lot of people are rolling off of a rate that they locked into 5 years ago. And now variable rates are around 3.6 and up, 5-year fixed rates at 4.09 and up. So for many of you, that's a real jump in the monthly payment coming from under 2 or 2. Even though the bank's rate didn't move today and it hasn't moved in most of a year, stable doesn't describe your budget if you are renewing. Now, the Alberta irony. The oil price pushing the national inflation number is the same thing that the bank flagged as supporting our economy. Energy-related investment in exports. So we feel it at the pump and we depended on it for our jobs. So both are true at once. And on housing, Alberta's a different story than BC and Ontario. For the 20 years before COVID, Edmonton and Calgary all stayed remarkably stable, while Toronto and Vancouver, they just went vertical. Calgary was a little hotter at times, bigger booms and dips, but Alberta as a whole never had Ontario or BC's runaway decade. We've climbed since COVID, yes, no question. Some of that's backing off in Calgary, not as much in Edmonton. And both Calgary and Edmonton are still far more affordable than Toronto or Vancouver. In a stretch like this, that's relative affordability, and that's where there's opportunity if you're disciplined about it. So what do you do with all of this? 3 things. 1, plan for reality. not the soundbite. It genuinely costs more right now to live, and you're still absorbing the last few years. Know exactly where your money's leaking and be deliberate about it. 2, discipline over impulse. This isn't the year to stretch your neck out for the boat or a toy or a big fancy car. Protect your margin. And 3, if you're buying, buy the right property and buy on logic and not emotion. Don't overpay. I see people will take on $40,000 more mortgage and 40 extra minutes of commute a day for 15 years because they got attached to a house. Run that math. The right opportunity, the right property, the right price, that will mean that you're never really stuck. The official story, it's rosier than your life right now. The gap is exactly why it's time to get sharp and not to panic. I'm Josh with Mortgages for Less at Indie Mortgage. Whether you're in Calgary or in Edmonton, if your renewal's coming or if you're wondering what you can actually afford in this market, send me a message and I'll give you the real numbers for your situation, not the headline. My contact information is in the video description. And if you felt like this was useful, please follow the channel, hit that bell for notifications, drop a comment with what you want me to break down next, and see you next time.